Welcome to the Explainer. Today we're going to pull back the curtain on something we all do, but maybe don't fully understand. What actually happens after you file your income tax return.
You know that feeling, right? You finally click submit and take a deep breath. But that's really just the start of the journey for your tax return. The answer to what happens next is all wrapped up in a process called assessment.
So here's how we're going to break it down. We'll start with what a tax assessment even is. Then we'll look at the routine automated checks that most of our returns go through. We'll also dive into what happens when the tax department decides to take a closer look, how they can even revisit past years, and what this new era of the digital taxman means for all of us. And of course, we'll wrap it up with the key things you need to remember.
Okay, let's get right into it. To really understand this whole journey, we've got to start with the core concept itself. What does assessment actually mean?
Think of it this way. It's basically the tax department checking your homework. They're looking at what you've told them, your income, your deductions, and they're just making sure it all adds up and matches the information they have on their end.
And this right here, this is the typical roadmap for your return. It all starts with you, with your filing. Then it moves to a quick automated check. For a very small percentage of returns, it might go on to a more detailed examination or even a look back at a previous year.
All right, let's dig into the path that most of us are on. These are the two most common stops on the journey for the vast majority of taxpayers.
You know, for most of us, especially if you have a pretty standard salary, this is it. This is where the journey ends. You file your return, you pay any tax that's due, and that act of filing is considered your self-assessment. Simple as that.
So right after you file, your return gets fed into this big automated system. It's like a quick digital once-over, you know? The computers are just scanning for any obvious mistakes or mismatches before giving it the all clear.
So what exactly are the computers looking for? Well, they're correcting simple math errors, making sure your TDS credits line up perfectly, and flagging things that seem a bit out of the ordinary, like a massive refund claim. And importantly, this is also the stage where your refund gets the green light and is sent out to you.
But what if that automated check flags something a bit more complex? Or what if your return is just randomly selected for a deeper dive? Well, that's when we enter a whole new phase. This is where a human being, an assessing officer, actually gets involved. They'll send you a formal notice, and it's usually asking for specific things like documents, bank statements, or just an explanation to verify the claims you made on your return.
So the big question is, why might your return get picked? It can be a few things. Maybe there's a big mismatch between the income you reported and the info the tax department got from, say, your employer. Or maybe you claim someone usually high deductions. And sometimes, hey, it's just the luck of the draw, a random selection. But the key thing to remember is this. A scrutiny notice isn't an accusation. It's just a request for more information.
Now this next one, this is the one you really want to avoid. If you don't respond to those scrutiny notices, if you don't provide the information they're asking for, the officer still has a job to do. They have to make a decision using whatever information they have available. And that's called a best judgment assessment.
And this comparison just makes it crystal clear. A scrutiny assessment is meant to be a two-way street, a conversation to get things right. A best judgment assessment? That happens when it becomes a one-way street because of non-cooperation. And that can often mean higher tax demands simply because your side of the story is missing.
Now, you might think that once a tax year is over, it's done and dusted. But that's not always the case. In some situations, the department can actually go back in time and reopen cases that were already closed.
This is called a reassessment, and it happens if the tax officer gets new information that suggests some of your income wasn't taxed in a previous year. As you can imagine, this can be pretty stressful because it means you're suddenly revisiting financial details you thought were long settled. This one's a little more specialized. Think of a protective assessment like the tax department putting a bookmark in a file. They use it when there's a legal gray area, like they're not sure who is ultimately responsible for paying a tax. It's a way to preserve the government's claim so it doesn't get lost while all the legal questions are sorted out. So all of these processes we've just walked through, they're changing, and they're changing fast. The whole world of tax administration is being transformed by technology, becoming more and more digital. And this quote from the Central Board of Direct Taxes, or the CBDT, really says it all. Their big goal is to reduce face-to-face interactions and make the entire system more transparent for everyone. And this isn't just talk, it's translating into real changes. We're seeing a huge push for faceless assessments, where you might not even know which city your assessing officer is in. Computer algorithms are selecting which cases get scrutinized. Deadlines and timelines are constantly being updated. It's a very dynamic space right now.
Okay, so we've covered a ton of ground here, from the simplest filing to the complex world of reassessments and the new digital age. So after all that, what is the one big thing you should take away from all this?
And this really is the bottom line. As the tax system becomes more automated, more faceless, your single greatest asset is your own understanding of how it all works. Knowing this journey, from the moment you click submit to how a digital review might unfold, is what empowers you to navigate the system with confidence. So the real question isn't just what happens to your return, it's how prepared are you to navigate its journey.